Hello, this is My Time Television exploring United States stocks. Today I'd like to briefly review the current state of the United States market analysis. Recently, the United States stock market has been showing signs of correction and some individual stocks have experienced significant declines. So let's take a look at the current market situation and check the overall market valuation. We often introduce something called the market score as an indicator or index for analyzing the overall market. The market score provided by choice stock combines the overall market valuation and supply-demand factors into a single score. This score is designed to help you assess the current market trend in advance, and we offer it as a quantified index. Yet another widely used indicator in the market is the Fear and Greed Index provided by Cable News Network and FN. This index also does a great job of showing the current market sentiment, and it's an indicator that's widely used by many media outlets and YouTubers. However, it does have its pros and cons. In the case of market score and also our square score, we focus on these two aspects. So, we evaluate both the fundamentals, including whether a company is overvalued compared to its actual performance, and the supply and demand side. We assess these two aspects together to assign a score. Cable News Network FN's Fear and Greed Index is much more focused on technical analysis and momentum. So if you look at the 7 indicators that make up this index, you'll see that when most of the indicators improve, the overall score tends to go up or down accordingly. Only a little bit of fundamentals are reflected, so in many cases the fundamentals are not well represented. And in the case of our market score, while most fear and greed cycles tend to last about 3 to 6 months per cycle, the market score cycles are actually much faster. So especially recently, as the stock price has been adjusted and has come down to neutral, we still see it as being in the greed stage, but if the stock price drops just a little more from here, it could quickly enter the fear stage at a rapid pace. This is the kind of volatility we're seeing. So in the case of Cable News Network FM, the Fear and Greed Index moves very quickly. When there's a rapid short-term rebound, you can tell that the index is rebounding. However, the downside is that it can stay in the fear zone for a long time before you can even confirm a bottom. So even though I bought stocks out of fear, it was only after quite a long period and a significant decline. Because there are cases where you can only confirm the real bottom after that, you should understand that this index moves quite quickly. I think it would be good to use the Cable News Network Fear and Greed Index with that in mind. In the case of our Choi Soo-tang and Mike Bakesko, there are many instances where things span over a long period, and once a trend is established in this area, it often continues in that direction for quite some time. So just because the stock price drops a bit, it doesn't immediately turn into fear or move in that direction. Such patterns may appear in supply and demand, but for a real breakdown, it must happen in fundamentals or valuation. Because those kinds of things can happen, we're looking at it more from a mid to long-term perspective, and once a signal sets a certain direction, it tends to move steadily in that way. So if you make good use of the differences between the two indices, I think it would be beneficial for your overall asset allocation. We've updated our market score to reflect the S&P 500 index's rate of change. Now the scores you see here in red, with the lines extending to the right, represent the baseline scores for each stage: fear, anxiety, and greed. So if the score goes beyond that, it moves on to the next stage like this. For example, if the score goes above 75 at the top here, it enters the greed stage. On the other hand, if it drops below 24, it falls into the fear stage. So the best time to buy stocks is actually during the fear stage, and the time to increase your cash holdings the most is during the greed stage. But increasing your cash holdings doesn't mean you need to hold 100% in cash. There's no need to do that. Still, when you enter the greed stage, it's good to secure at least 20% to about 30% of your portfolio in cash. So if it feels like a waste to sell all your stocks, you can reduce the quantity of the stocks you hold. Another way is to sell the ones among your holdings that have lost momentum, are expensive, or have broken their trend first. The same applies to underperforming companies. So usually, rather than adjusting the proportion of all stocks equally, it's better to set a cutoff for certain stocks and remove those below that line to increase your cash holdings. This recent data covers about 3 years, and as you can see, I've marked in red the cases where the greed phase almost reached its peak. In June and July of 2023, we entered that phase, and then again at the beginning of 2024, and at that time as well, we entered the greed phase. At the end of last December, we entered the greed phase, and then we saw the phenomenon where stock prices plummeted right after that. Broadly speaking, this level of greed exceeding 90 points has occurred for the third time in the past 3 years, marking the first, second, third, and fourth such instances. If you include up to last December, including the greed phase, this is the fourth time. So on the far right, recently on July 11th, we reached a score of 97 out of 100. Of course, there could be periods where we keep hitting 100 points like here, where there are brief moments when we reach that score. We also recorded a score of 97 on July 10th, but after that it dropped quickly, and as of August 1st it had fallen to 70. So right now we've fallen into the overconfidence stage, but basically when the greed stage goes over 90 points and this state rises, it's a good idea to secure a higher cash ratio. That's because we're facing an index correction, and when the index is adjusted, companies that have shown strong momentum or those with high volatility could see their individual stocks drop by 5 to 7%, even if the index itself only falls by 1 or 2%. Since the volatility of those companies can be high, it would be a good time to rebalance your portfolio. On the other hand, the yellow areas represent times when there was a lot of fear. These are the periods when the market was gripped by fear, and during these times you will often see a lot of really bad news coming out in the market. So despite that, buying during those times can actually help your real returns, and you can see that in this data and these indicators. Now the areas drawn in blue here represent the 20 days after the market score was recorded. 20 days is about a month, since if you count only trading days, 5 days a week, 20 days is roughly a month. By showing you the rate of increase 20 days after the market score was recorded, we're looking at whether this actually has any meaning as a leading indicator and whether it can help you adjust your cash allocation. If you look at the greed zone market in red here, you'll see that the returns after 20 days are actually negative compared to this baseline, since this is 0. So there are a lot of negative returns. On the other hand, if you buy during the fear zone here, the returns go over 10%. So buying during fear means the index returns go over 10%. For individual stocks, many companies' returns can jump 30 to 50%. Conversely, when the index drops 10%, quite a few stocks drop 30 to 50%. That's the right perspective. So, when the greed phase lasts for a long time in the market score, you need to be a bit cautious and pay close attention. So, if you look at July 11th, when it recently hit a score of 97 that day, was the peak. But according to the market score, the index itself wasn't at its peak. Because even if it shows a score of 97 up here, the index can still keep rising, and in fact it did go up a bit more. But what we're showing here with the graph is the index of the stocks that were bought at that score of 97 20 days later. If you hold those stocks for about a month, the average return of the stocks bought at a score of 97 almost converges to 0. That's how it turns out. So basically it means you hardly make any profit. For the index it's different, but individual stocks have a higher risk of loss during this period. When entering this stage of greed, it's advisable to increase your cash holdings. Raising your cash to 20-30% allows you to buy more of your desired stocks at a lower price during a market correction. This could be a good strategy to employ. And now, the parts you need to pay close attention to are that even in this greed phase, there is a stage where things go up, and as you can see on the right, there is a blue stage where things drop. So, when moving from over-enthusiasm to normal and from over-enthusiasm to greed, you enter the greed phase. As the index rises, overall strength continues. The peak is reached when valuations and fundamentals become expensive and supply and demand break down. That's the correct perspective. If you keep holding on, the market won't collapse. However, if it gets slightly damaged, it can go through a correction very quickly. It would be good to use this score with this concept in mind. So right now the score has dropped to about 70 points, but I'll explain later what you should do at each score range. So right now this market score is displayed right on the main page when you enter our Choice Tech website. You can check it every day there, and if you click on it, you can go in. Let me show you on the site right now. When you enter the main page, you can see it says market score here. If you click here, you can see the current stage and the current status.
If you click on this,
At the bottom, you can see the market scores. So you can check how far things have come right now, and it would be good to use this to see when is the best time to buy. Going back to the textbook, when things are going up like this, when the trend is rising, it's not too bad. But when it hits the peak and starts to fall, you need to be careful, and it's a good strategy to secure plenty of cash. Later, after some corrections, there will be periods where things pause like this, so even if it stops, don't buy right away or act hastily. If the market score drops just a little more here, the expected return a month later probably won't turn negative. At the very least, the index itself won't drop significantly compared to now after a month. Here, fundamentals of the market or past events or things related to tariff negotiations could come out as events and cause further declines. It would be good to monitor those aspects. The best timing is not really the first day when everyone is in panic, but rather the first day when things start to turn around. That's the best time. It's the same for the peak as well. If you use that well, I think it will help you manage your cash ratio. As for investment strategies by section, if you visit the Choice Stock website, you'll find this exact screen showing all the steps. So take a look at this, but when we enter the greed phase, things are overly optimistic, so this could be a sign of a potential stock price drop. That's why I recommend realizing your profits or increasing your cash ratio during this time. Right now we're in the greed phase, and at this stage people are aware of the risks but still pursue high returns. This is also a time to realize profits. What I mean is, this applies when you've entered the greed phase after going through fear, anxiety and normal stages from below. At that time, it's best to gradually realize your profits and increase your cash ratio step by step as you move past the greed phase. Right now, we're in the stage where we've dropped from greed to overexuberance. That's the stage we're in. Even at this stage, if you don't have any cash at all, it's better to increase your cash ratio a little, just a bit more. You can have a chance to buy good stocks at a cheaper price, and companies that were too expensive before might offer good opportunities at prices that usually appear during the overexuberance or normal phases. It would be good to take advantage of that by buying those kinds of companies. So this market score gets updated daily at around 7:30 anti-meridian Korea time, which is about 8:30 anti-meridian for us. So you can come in at around 7:30 or 7:31 and check it every day. On that screen, you can see how the scores have changed and decide how you want to interpret them. I hope this helps you get a better sense of the overall market. If you found this helpful, please subscribe, like, set notifications and comment. Thanks.